While there wasn't much in the way of economic activity today, the stock markets did generally rise across the board here in the United States. In fact, the Nasdaq Composite hit an all-time high. But the real story was over in the commodities markets, where we saw gold surging past $2,000 an ounce to a record all-time high. Of course, that's a trend that we've been looking at and focusing on quite a bit here in these videos in recent months, so we're happy to see that. So we'll take a look at all of that, see what it means for our market posture. We'll then get into a trade application example in the consumer staples area, where we saw a stock kind of break out to the upside after an earnings report here within the last 24 hours. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's August 4th, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel. While you're over there, be sure to check out our description area and sign up for our email distribution list. We're also heavy users of Twitter. Feel free to follow me at Brandon Van Zee, and we appreciate those of you that click like and retweet on these Market Outlook related posts, letting us know that you'd like us to do these videos as often as possible. And then lastly, we do have a presence over on Facebook as well. Feel free to join our group at the web address you see embedded in the logo in front of you. All right, let's go ahead and jump into our charts now. And as you can see, I've got chart 4B pulled up here in front of us for those of you that are premium members of Market Scholars that want to follow along with your own charting package. This particular view is a 4-grid, so it allows us to see the 4 major U.S. equity indices and gives us a sense of whether they're mostly traveling in the same direction or whether we have some differences out there. And for the most part, we do see that they are traveling in the same direction, which fortunately for the bulls is higher. Where we do see a little bit of difference is today we saw a new multi-month high on the S&P 500. Now remember, that's not an all-time high, but a multi-month high. This is a 3-month chart we're looking at here, so this is at least a 3-month high. But with the Nasdaq Composite, this is an all-time high. In fact, you can see this little label here showing us that it's a yearly high today, whereas we don't see that label above it in the S&P 500, letting us know that this is just a multi-month high on the S&P 500, whereas it's not only a yearly high on the Nasdaq, but an all-time high in addition to that. So strong moves out of a lot of those work-from-home stocks, technology-oriented companies. In my top-down trend trading class that I teach on Mondays, where we use the 3 green arrows philosophy, our account value hit all-time highs here today. And I know a couple of the driving factors to that is the video game stocks. So a lot of people think of work from home and they think about, maybe the business side of the equation, buying new computer equipment and things like that. But in a lot of cases, kids are at home, and maybe some adults that are kids at heart playing a lot of video games. And we did see a number of those video game manufacturers bursting to all-time highs here today. So that was good news there. But a lot of that is technology oriented, and it is technology that continues to drive these markets higher and has been the case for quite some time. So the other two that I didn't mention are the Dow Jones and the Russell 2000. You'll notice that neither one of those two are hitting multi-month highs at this point. The Russell 2000's high was back here on June 8th, and that was also the same date for the Dow Jones Industrial Average. So both of those, we still got a ways to go, but we are starting to see some nice support. In fact, I like the bounce that the Dow Jones is getting here in the last couple of days, where we touched that rising 30-day moving average 2 days in a row, and then the last 2 days we bounced off of it to the upside. So it kind of looks like it's using it as a launch pad higher, just like it did back here in mid-May, and then did here again in mid-June, and then kind of during this stretch of time here at the end of June into early July. So you can see that it has not spent a whole lot of time below its moving average, and the more often it can bounce up and off of it, the longer that trend is intact. So that's a good sign there. And speaking of the Dow, most of you are aware that the Dow is a price-weighted index, and there's only 30 members of the Dow Jones Industrial Average. One of those influential members is Disney, and if I were to type in Disney here, I know this is hard for those of you that are watching on a mobile device to see, but I'll read it to you. We can see after hours Disney did report their earnings, and the stock market appears to be cheering them on. The bid price is $122.77 at this moment in time, and this stock closed at $117. So we're up about $5 per share in Disney after hours. So we might have a little bit of positive momentum going into tomorrow's open as a result of that. Otherwise, main takeaway here is that we do have bullish postures across the board in all of our different indices. Be aware that we almost got a bullish intermediate confirmation signal here on the NASDAQ composite. The momentum line stopped at 20.76. Remember, it would have to fall below 20 before that signal takes place. So we just barely missed having that here today, but it was awfully close there. So for the most part, the trends are intact. We continue to have bullish postures across the board, just like we have for much of the last several months. Now, if we take a look at our three green arrows set up here, this will be chart 4D, for those of you following along at home. Here you can see that 3 out of our 4 charts do have a 3 green arrow signal intact. Now on these charts it's easy to see because the background colors will tell us whether we have 3 green arrows or not. And you can see that the S&P 500, which was up 0.36% today, does have a 3 green arrow signal. The NASDAQ composite, which was up 0.35% today, also has a 3 green arrow signal. And then the Russell 2000, which was up 0.69% today, also has a 3 green arrow signal. We don't have one here on the Dow Jones Industrial Average yet, but if we have an update tomorrow, the chances are very high that we will have one as of tomorrow's close. I say that because you can see here that the missing link is on the MACD histogram. Remember, the MACD histogram has to rise above the 0 line in order to produce a green arrow. And right now, the MACD histogram's reading is awfully close. I mean, you can barely see it. It's so close to the 0 line in that case. So if we have a little bit of upward momentum tomorrow, we're likely to see that the Dow Jones Industrial Average will also end up with 3 green arrows. So another sign that we have a fairly strong market here in the United States and elsewhere, as we'll see here in just a moment. In fact, let me go ahead and pull up our asset class 12 grid so we can bring up that conversation. And you'll notice up here at the top, EFA was up 0.55% today, so that bested the United States stock market. However, EFA does have that pink background color of chart, which reminds us that we have a weekly bearish posture on it. However, we are above a rising 30-day moving average, so I don't know how much I would put into that posture. But you'll also notice that the EEM, which tracks the emerging markets foreign stocks, was up 1.33% today, easily beating the United States stock market. And you can see that we're nearly at 3-month highs on EEM, and this is a very strong chart right here. Notice that EEM is up 23% in the last 3 months, whereas the S&P 500 is only up 16% over that time period. So we have really good strength here with that strongly bullish posture on emerging market stocks. And much of that can be attributable to a falling US dollar, which is something that David and I have regularly pointed out to our viewers for a long time at this point. And you can see this chart in the lower right-hand corner here representing the US dollar, and the pathway is clearly to the downside. And today was a big down day as well. It was down 0.36%. You can see the size of that candle is above average there, and we basically closed on the lows of the session. Remember that a falling US dollar has the tendency to support foreign financial investments, whether we're talking about stocks or even bonds. And you can see foreign bonds were up here today as well. Another thing that a falling US dollar has the tendency to do is help support commodity prices. And as I mentioned in the intro, the big story today, at least from my perspective, was the massive move that we saw out of gold. Take a look at this chart right here. In fact, let me go ahead and right click on it and maximize it so we can see it a little bit better. Take a look at that candle. Gold was up over 2% here today. I mean, a monumental day that we saw there. And this is GLD that we're looking at, by the way, which is an ETF that tracks the price of gold. But if you wanted to see the actual gold futures contracts, you could also type into thinkorswim/GC. And you'll see here on /GC that we closed above $2,000 per ounce. That's a big moment, ladies and gentlemen. I've been following the gold markets for the last couple of decades, and for a while it seemed like we weren't going to surpass those prices of about a decade ago for quite some time, and then this year has just blown the cover off the ball. I'll show you here on a 20-year chart what this kind of looks like. We had a big run-up in gold prices from basically 2001 all the way till about 2011. And we kind of had a little bit of a blow-off top type of a thing there. And we ended up going all the way back down here to a pretty low level in 2015. There we almost went below $1,000 an ounce. So to put this move into perspective, we've basically doubled the price of gold from late 2015 to where we're at right now here just above $2,000 an ounce. And in doing so, you can see that this massive move that we've had in the last couple of months, we've now breached those prior highs. So this is a trend that is clearly intact. It's being driven not only by a falling US dollar, but also as a kind of a safety asset of sorts that was doing a little bit better than stocks were during the coronavirus scare that we had there in the springtime. So this is an area that continues to have a lot of focus. We do own one gold stock in my top-down trend trading class. Wish we owned a couple more, but I am glad that in this particular presentation I have offered up a number of gold bullish trades for you guys along the way, and most of them have done reasonably well. And you can imagine a lot of those gold mining stocks are doing pretty good at this point as well. If you wanted to take a look at a general idea of that, you could look at GDX, which tracks the senior gold mining companies, and you can see this massive candle here bursting out above that prior resistance zone. So GDX was up 4.5% today, to give you a sense of what the senior gold miners were doing. And then if we wanted to look at the junior gold miners, you just add a J at the end, so GDXJ, and it's the same thing here. You can see we're up almost 5% on the junior gold miners here today. So those trends remain easily intact. Gold continues to be one of the best stories of this market in 2020. Now, oil wasn't nearly as exciting as gold, but oil did finish higher by nearly 2% here today, and is bouncing up and off of a rising moving average, and does have a strongly bullish posture just like gold does as well. So again, that falling US dollar is causing a lot of ripples across many different markets right now, and is something that hopefully you guys have been benefiting from by watching these videos over time. Let's go ahead and take a look at our next set of 12 grids. Let's take a look at the U.S. sectors 12 grid. This will be chart 5C for those of you that are following along at home. Now in this case, you can see we only have one pink chart on the board, and that is materials. And remember, this is the market cap weighted version of these different sectors here. So there will be situations occasionally where an equal weighted version of it will have slight differences. But one thing that did catch my eye, and I guess I didn't realize until just now, that materials had the only weekly bearish posture on the board, but it does now instantly remind me that if I were to look at the sector selector, we had a tremendous fall in materials ranking. Now remember, this gets put together on Friday nights, so this is a couple days old at this point, but we were already getting the sensation late last week that materials were starting to stumble a little bit. You can see that huge fall there for materials, and then that makes sense a little bit more to see that we have a bearish posture on them as well. But keep in mind that materials is where the gold mining stocks are, and so that can help support materials, The downside, at least in the case of XLB, is that there's only one gold mining stock in the S&P 500, and that's Newmont Mining, and so it doesn't have a big influence on XLB. So if you wanted more pure gold mining exposure in an ETF form, you would want to use what I mentioned before, GDX. But anyway, materials are starting to suffer a little bit, have a little bit of weakness. In terms of areas that are improving, I wanted to specifically point out the consumer staples. Take a look at this move down below in the consumer staples. Staples were up 1.25% today. In fact, I think one of the trades that we have going for this market outlook presentation in my paper money account here is in Costco. In fact, don't we have Pepsi as well? I want to say we have both of them. Let me just kind of scan in here on the market outlook. Yeah, in fact, I could take it a step further. We have Costco, Pepsi, and Smuckers. I didn't realize that all three of our sold put trades that we have on right now were all consumer staples companies, and you can see all of them are making us, over $100 on each of those trades in just these paper money examples here. But they're all up for us in above 80 percentile. They're in a profit and loss percentage. So we've had a little bit of success already with the consumer staples, recognizing this big move off of that rising moving average in the past month or so, and that really continued its surge here today, up 1.25%. So happy to see consumer staples hitting new multi-month highs here in this particular case. And I did notice that the consumer staples also benefited on the sector selector rankings. And remember, the sector selector is going to be an equal weight version, and the ranking system slightly different than what you might see on my 12 grid. So it kind of gives us a slightly different vantage point. But this does confirm what we saw over there on the 12 grid, which is consumer staples did rise week over week from number 7 up to number 5. So some progress there on the consumer staples. But as we look at the rest of the charts, I mean, things are in pretty good shape. I would say that, the chart that probably looks the most difficult or weak, I guess you would say, is energy. So while energy had a big day today because oil prices were up based upon that falling US dollar, we also heard news, by the way, of an explosion in Beirut. So anytime we have some skirmish in the Middle East, there is the tendency that oil prices start perking up a little bit, so we'll keep our eye on that story. But the energy chart, it does leave a lot to be desired. You can see that, yes, it's nice that we bounced up the last 2 or 3 days, but we're still just kind of bumping our head up against that falling 30-day moving average there. So that chart probably is the one that is the biggest struggle from a trend perspective. If you look at the rest of the charts, they're all in pretty decent shape. Technology has really taken off again. It kind of took some time off there, made us wonder, is it going to start slipping? And then the last week or so, we've had a tremendous push higher in technology. A lot of that thanks to Apple after announcing their 4-for-1 stock split, and then hearing news about Microsoft trying to acquire TikTok and a few other news stories out there that were pushing technology stocks higher. And that's one thing that we identified here on the sector selector last week as well, where we saw technology surge back into the number 2 slot after taking a couple of weeks of rest there. So, that kind of that particular story continues to work, where we saw nice support bounce off of rising moving average, and a lot of those work from home NASDAQ oriented stocks are part of that technology sector that has worked so well, not only in recent months, but really in recent years as well. Out of all of these 11 sectors, technology has been the most consistently bullish for years. I know that firsthand as someone who teaches a top-down trend trading class and who has done so for the last 5 or 6 years on a weekly basis. We get a chance to see where are the rotations taking place, and it just seems like time and time again, technology consistently outperforming in good markets and bad. When that ends is anybody's guess, but this has been an interesting era where we've seen these trillion-dollar market caps emerge in those technology names, and that's kind of helped support their entire ecosystems around them in the case of Apple and Microsoft. All right, now I wanted to talk about our trade application example, and it is going to come from the consumer staples space again. Now, unlike the three consumer staples trades that we have going on currently, this one is not going to be a sold put trade. Instead, it's going to be a swing trade. And as I mentioned in the intro, it's based off of a company that reported their earnings here within the last 24 hours. And the company in question is actually kind of in the epicenter, in the heart of the coronavirus scare, yet apparently the earnings weren't as bad as originally feared, and therefore the stock price went up here today nicely as a result. So let me go ahead and pull that up. I'll just use chart 3A for this. And the stock I wanted to pull up was USFD. This is US Foods. Now, this may not be as familiar of a name to many of you, but a lot of you have been to my dividend classes over the years, and you might be familiar with their chief competitor, which is Cisco Foods. Cisco Foods, ticker symbol SYY, is a dividend aristocrat, so it's a stock we do talk about a little bit more. US Foods is the second largest food distribution company in the United States behind Cisco, and did its IPO here just a couple of years ago. It doesn't pay a dividend to my knowledge yet, as it is a newer stock to the stock market, but nonetheless it does carry some heft in the industry. It's an important player in its industry. And as you can imagine, food distribution is a tough business right now as a result of the coronavirus and shutting down all of the sports stadiums and the cafeterias and all of the other places that people used to gather and buy food at concession stands is getting hurt right now. And of course, these food distributors do large restaurant business as well. And while restaurants are trying to get back on their feet with more takeout and drive-through options, there's still a big struggle in that particular line of business as a result of people being a little bit fearful of going into restaurants the way that they used to and sitting down to have a meal with their family or friends. So there is a little bit of fear in this particular name. And you can see that it has underperformed the stock market over the last 3 months. This S&P 500 dotted line that you see kind of in gold represents the pathway of the S&P 500 versus this particular stock, US Foods, and therefore with the dotted line above the price candles, it basically says that this stock, US Foods, has underperformed the S&P 500. But today was a very solid undertaking for this company. You can see that the stock was up 7.75%, so a huge day after reporting earnings. Now notice that they actually lost money here today. They lost 25 cents per share on their earnings report, but the estimates were for them to lose 39 cents per share. So they didn't make a profit this past quarter, but at least they lost less money than what Wall Street analysts were expecting, and therefore they breathed a little bit of a sigh of relief and sent the stock price a bit higher. And you can see that the stock price bounced nicely off of this now rising 30-day moving average, and the close price is basically just a hair above the close price of this candle over here. Actually, it was identical now that I look at it. The close price over here on July 22nd was $21.68. What are the odds? Today's closing price was also $21.68. So point is, it got right back to that vicinity, and now we're at basically the highest levels that this stock has been trading at since basically this candle back here on June 10th. Now, one of the reasons that this particular stock caught my eye, besides having such an strong outperformance day and bouncing up off of a rising moving average and having this bullish near-term posture, that's what the blue background color represents on this particular chart, but we also have what's known as a bullish near-term divergence. You'll notice that if you look at the recent lows in the near-term line, that's the blue line on the market forecast technical indicator. Remember, we typically will use the green line with our analysis during these videos unless you hear us state otherwise, and this is one of those times where I'm stating otherwise. But just to point it out for those of you that were interested, we do have a green line that's rising at this moment in time as well. It's at 61.33 and rising, so it could be an interesting trend trade for some of you. But for our purposes here, I wanted to focus on its swing trading possibility, where we also have a bullish posture according to that blue line. It's at 74 and rising at this point. But you'll notice that we have a bullish near-term divergence, and that occurs when we have two lows in the in the blue near-term line, where the second low is higher than the first low. So notice the first low bottomed out in the lower reversal zone here on July 28th. The next low was on July 31st, and it bottomed out above the lower reversal zone. So it was a higher low in that particular underlying indicator. Now we want to look at the candles that were associated with those two moments. So we go back here to July 28th, and that would be this candle right here. And then we look at the candle on July 31st, and it would be this candle right here. And you can see that price was down slightly during that time period when the indicator down below was up. So price down, indicator up, creates that sensation that, hey, there may be some more bullishness brewing below the surface that people that are only looking at price can't really see. And today's move higher helped kind of confirm that idea a bit more with the bounce. So what I thought we would do in this case is a simple swing trade, a 1-for-1 swing trade. And what I mean by that is, you know, we're going to risk as much to the downside as we're going to hope to make to the upside. So a 1-for-1 reward risk relationship. And what I typically do for those types of trades is identify an important recent low. And for that, I would probably point out this candle here on July 10th. The low price that day was $18.44, and I would want to put my stop loss a couple of pennies below that, because you got to have kind of a, you know, a moment where you you eject from the cockpit, and you see that your plane is going to crash. And that's the moment in time where we could say, yes, we're wrong. And remember, we'll be wrong plenty as traders. We'll be wrong a lot. So know where your line in the sand is. And for us, we're going to use that as our bogey right there. So 2 pennies below that would mean that we're going to put our stop loss at $18.42. So I'm going to get my calculator out here, and I'm going to take the current price of $21.68 and subtract out $18.42, where we're going to put our stop loss, and that means we're taking $3.26 of risk per share. So if I do 100 shares like I typically do during this video, just because it's an easy default for us to do, it means basically we're risking $326 by buying it, hopefully, tomorrow morning at the same price where it closed, and putting our stop loss a couple of pennies below that low. So our risk would be $326 for a 100 share trade in this particular case. Now, if we wanted to implement the 1-for-1 reward risk relationship that I mentioned before, that also means that we can use that same number, $3.26, and add it back to the current price, or the price we expect to get filled at, which is $21.68. And that means that our upside price target is $24.94, which would put us back up into this general vicinity where it was trading with this 3-candle formation back here at the beginning of June. So we would bail on the trade down below this level, and we would try to achieve our price target up here in this general vicinity up here, and that would be a 1-for-1 reward risk relationship. So let's go ahead and place that trade by right-clicking on the chart, coming down here to buy custom with OCO bracket. I'm going to link these together so that way the system understands that all these orders work together. And the first part of the trade, we're going to try to get filled at the closing price of $21.68. And we're going to put that in just as a day order. So if it doesn't get filled tomorrow, I'm comfortable with that. There are plenty of other trades out there that we can pursue. So I'll just leave that out there for tomorrow. And then that means on the upside price target, that's the first line in pink there that you see in that order type, we're going to change that to $24.94. So that's our upside price target. We're going to change that to good till cancel. Directly below that line, we're also going to change that day to good till cancel. That represents the stop loss. And on the stop loss, we're going to change that number to the downside to 1842. So Once all of that is established and linked together, I can click confirm and send, and I can review this order, and I can see in here that I'm likely putting this in correctly, because I can see easily that the base is plus 326 on the upside and the base is minus 326 on the downside. In other words, our upside potential equals our downside risk if we are to get filled at the price suggested there in the green line. So I'm going to go ahead and send that in, and we'll see if we can get filled on that first thing in the morning. Thanks for joining me here this evening. If you got value out of this presentation, we would encourage you to go over to Twitter and click like for us on the post represented this particular presentation. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.